And a very good morning to you, and welcome to Friday, February 4th, 2022, to the pre-market rundown from TriggerCharts. I'm Andrew Horowitz. Thank you so much for joining me today and each and every Friday where we go over what's going on in the markets, and it has been quite the very difficult road. We are wondering how long this is going to play out, or is it going to be something that is quick and painless from here on in? You know, I thought we'd start out today with a couple things as I read the disclosures like I do. First, I want to show you to the right side of the screen. You'll notice this is the yield on the 10-year. The ticker, if you want to watch this over on TradeStation, is $TNX.X. Not all of you will have access to this, but depending on what your subscriptions are, you will. And basically what it comes in, and you can look at this, it comes in like 19.1. See that? You can adjust this if you want. But basically, think of it as 1.91. So the 10-year is currently trading a whoppingly higher 1.192, 1.1912 now percent from where it was yesterday, where it was at about 1.8 and change. So that's something to keep an eye on. That's why you're seeing markets are under pressure. Because why? We got a much better than expected number when it comes to jobs. Plus 400,000 after ADP came in with a negative print, and everybody was like all up in arms over the last few days going, oh my God, Omicron's going to really hit and it's going to be a problem, and we're going to see this drop in jobs, and the economy's going to roll over a cliff, and everything is terrible, and they sold off on that news. Well, today, what happened is, oh my God, things are better than we thought, and the economy's doing really well, so let's sell off on that news. You notice a pattern going on here? Sell the good, sell the bad, something we talked about last week. All right, I'm going to launch a poll right now because every once in a while I like to do this and see where your head is at and where you're positioned. Question is, are you buying, selling, holding, totally shell-shocked what happened in January, or trading? There it goes. And as we do that, I will now tell you, of course, the important disclaimer that investing involves substantial risk. Past performance is not a guarantee of future results. Please consider this for educational purposes only. And as always, use your best judgment when investing. What we're talking about today is, and each and every Friday, are the core indicators that we utilized for trading, which is different to a degree than investing. And I want to make sure you put that into proper perspective. When you look at trading, you look at different things like, well, we have short-term scalp trading, we have day trading, we have swing trading. Things that are, we'll call it a few days or less. It could be minutes, it could be hours, it could be a couple of days, few days. Once you get beyond that and to the, we'll call it weekly, monthly could still be swing trading, by the way. Once you get into monthly, now we're into a little bit of a different circumstance, and I want you to consider that more of an investing situation. So this question really is about your investing, buy, sell, or hold, because if you were trading, you wouldn't be talking about that. You would click the trading button. So we'll wait a couple of minutes and we'll get you the results on where people are right now with a pretty good size group here today. I'll give you the percentages to break it down, what's going on there. But I will tell you right now, early in this poll that we have right now, there is zero interest in buying, it seems, which I find pretty interesting. All right, the theme today, dead cat bounce or what? Where are we when it comes to the markets right now? Are we seeing a situation that we are in a bottoming, or are we in a topping? Are we in somewhere that is in nowhere, no man, no person's land, where there is a real negativity? And from what you're telling me right now here, it looks like there's some negativity out there, and that's not a surprise to anybody right now. Clearly not. And as we see the bond yield spike, and on top of that, things like oil prices over 91 on WTI crude, and inflation numbers keep on coming up and hitting us in the mouth. And what happened yesterday, the disaster with Facebook's numbers, that was just abysmal. But that did give us some great opportunities. The sell-off in certain names like Snap and the sell-off in Amazon turned out to be real opportunities for at least a couple of day trade, if not longer term opportunities right now. And those were, I would say, off the charts, very difficult to discern where we were in terms of narrowing out a bottom. When you get to all-time lows, or at least 52-week lows on some stocks, you start to make up stories. You know what I mean? You start to make up, where are we in the process of the chart. So I think that right now, when we look at what's going on, this question of we have a massive reversal this week, is it just a dead cat bounce? I want to put something in perspective to you. I want you to take you back 2 weeks for a second. And I want you to remember that day, that Monday morning, that we came in, markets opened, and then plummeted like 1,100 points on the NASDAQ, 3%, 4% on the NASDAQ. The S&P was just getting obliterated. And then there was this moment of time that everything just sort of went to slow motion and stopped. And then from there, reversed not only a little bit higher, took back all the losses, ended up in the green by the end of the day. That candle was very telling. There was much more volatility throughout the week, but by the end of the week, all of that volatility, if we just closed our eyes and were on vacation the entire week, we came back the next week, we said, oh, nothing happened. It was like nothing happened, right? You're living through it. It's very difficult. So one of the things I want to talk about today is the idea of stepping back a little bit. The idea of giving yourself perspective, because when you have your nose on the screen, whether it's the screen of a computer or on your phone or on TV watching the business shows, you lose that perspective. Have you ever noticed that if you are immersed in looking at the markets and you're not having a good day in terms of your mental psyche about what's going on, but I don't know, maybe you go out to a lunch, something happens different. You know what I'm talking about. You gain a much different perspective. How is that? You just stepped away for a second. You grabbed something to eat. Was it the caloric intake? Was it that you had a couple martinis? Was it that you just stepped away? I think when you step away and pull back just for a moment, you give yourself that perspective of, okay, what am I doing this for? Where are we going? And let me get away from the concern, the fear, and all that may be engulfing me right now and start getting back to logic. And as a matter of fact, I'm going to give you a preview right now and tell you to make sure that you listen to next week's coming up, launching on Sunday, the Disciplined Investor Podcast. This is a part of the discussion that we have on that will clarify a lot of these issues for you. But where we are right now, we are seeing that we start out this week with that big reversal again on Friday last week. And then coming into this week was a fantastic week, which either did a couple of things. One, it sucked people into buying and holding and staying and making a big mistake about what the future brings, or gave the opportunity to get in at some incredible prices, almost like broken market kind of flash crash, fat finger moves that we saw the week before. Let me give you a quick end of the poll and the results here. So, like I said, of all the people that are on this call right now, I cannot believe this, frankly. 0% are buying, which, by the way, the contrarian in me says, that's interesting. 18% are selling, 27% are holding, but a 55% number, which I am very happy about, are trading. That is the play right now, especially if you're a trader. If you're a buyer and holder and you have that kind of portfolio, because that's something smart to do, that's one thing. If you're trading, that's another thing. Trade your trading portfolio and invest in your investing portfolio. I don't know, is that words of wisdom or is that just obvious? So I think that's really important. Interesting results there. So the tech rally that we saw really pulled us through a lot of things. And then we saw the Facebook report this week that just widespread, just cut stocks in half. Well, maybe not in half, but it cut them down pretty well. And that's a big concern when you see one stock losing $250 billion, the largest loss in history in any one day. Many of you say Facebook deserves it. I'm not a big fan of Facebook either. But the fact of the matter is, when we look at how the market reacts to this, what we saw yesterday was panic that spread out a lot of places, giving us opportunities. Always look for the opportunities when we're seeing panic in the streets. The other thing that's, I think, really important are the ranges right now. I mentioned this last week. I think I even mentioned this the week before. I'm going to mention it again. When we see these kinds of moves on bonds, let's take a look at where we were. I think it's important to reflect on where we were overall. Back in the beginning of this year, right here, right at the spot, right here, we were under 1% on bonds. Quickly moved up dramatically. That's what caused the first sell-off, right? That was in 2021. Excuse me, 2021. That big sell-off we saw in the beginning of the month of January. We were able to absorb a lot of that throughout the year, but then the roll down of bond yields really helped out a lot of things, particularly technology last year. Fast forward to where we were here this year, very similar move at a different level. We started out with the 10-year trading in the beginning of this year at about 1.5%. Okay, far cry from where we were at, let's call it 1% right here. Okay, but this is a big move. So we saw this big move and reversal throughout the year, moving up, moving up, moving up. Again, if you kind of take the tops and the bottoms, you look at the trend. Clearly, trend is moving higher. There's no question about that. Breaking out over the top right now, 1.894, slipping a little bit, which we are seeing that futures are coming up a little bit into that slippage of the bond yields. I don't think bonds are deservedly in this area, frankly. If England's not going to raise by 50 basis points, I don't know. Even though we went up from 18% this morning to a 33% possibility of a 50 basis point rise on the next meeting, I'm still thinking the Fed is not stupid enough to really do that. I know they want to show who is who. They want to come out, pumping my chest right now. Can you hear that? Pumping the chest and saying, we are in charge of all this, which is shenanigans. The fact is that they're the worst, terrible forecasters, didn't see this coming, won't see the next thing coming. And if they do try to break the back of inflation, they're going to break the back of the markets and of the economy. They need to do slow and steady to get us out of this. It's kind of like if you were in a terrible car accident, you probably don't want to get up the next day and start doing jogging. You probably want to do a slow, easy process till your bones heal, till your spleen is back intact, till you're doing all the things and off that catheter to make sure that slowly but surely you gain your strength back by putting you back into a situation where it's probably not good for you. You're going to break something and cause permanent damage. The Fed is probably going that route. I think buy the dip of some areas are very interesting still. And I think that when we look at where we are, this big move up, again, from about 1.55 right here to where we are about 1.8, very big move. But we saw a lot of the work being done by the markets already. This move up has become a bit parabolic on the back end, particularly from where we were in about December. I mean, look at this move right here, right? This is straight up. So something to consider right there. Not good for technology shares, etc. What I wanted to mention with these kinds of moves, and the same thing we saw with the Qs, etc., is watch your sizing. If you're used to trading 4 futures contracts, whatever the number is, 10, I don't care, whatever your number is, back it off a little bit. Because what's going to happen is those wide ranges, those fast-moving markets are going to whipsaw you dramatically. Headwinds, we have a lot of them. We could talk about these all day long if you want. There's a lot of headwinds that we could bring to the fore, like, oh my God, what's going to happen in Russia and Ukraine? Oh my, what about Omicron? The slowdown in areas around the world and the supply chain issues. What about the Fed inflation? A lot of hikes are coming. The list goes on and on. The question is, are we going to be climbing a wall of worry? Make no mistake, I am not sitting here as Mr. Bullish. At the same time, I really don't want to be Mr. Bearish either. And I'll tell you the reason for that. The reason is that I find that if we are basing our information off anecdotal data, and yes, anecdotal data, which I used to believe before, I would say 2015. The good information we got from the Fed and from all of the various statistical information. The problem is that I think there is a break. I think that the idea that the economy is the market and the market is the economy has been broken for many years. A guideline to utilize to understand trends, I think, is very important. But when we look at economists and we try to discern what is going to be what by what they're saying in terms of either one, hey, we have a buy rating like about 95% of the analysts had on Facebook, and then you see a quarter like this. Or you see that people are looking for a drop or at least a very small rise in the employment, people that are added back to the payrolls, and you see close to a $500,000 add. Something's troubling there. the numbers don't work. The inflation numbers we have to take with a grain of salt, understanding that there are many reasons why this is happening. Yes, prices are going up. Hard stop, end of story, bottom line, prices are going up. We saw that Amazon is going to be raising the price of Amazon Prime, which is actually a good thing. They haven't done that since 2018. My opinion, they're very underpriced for what they offer. The video, the photos, unlimited photos library. You have the music, and then you can get things in 1 or 2 days, and even same day for some reasons. So I think that was very good, and they deserve to be moving up because they hit some unbelievable metrics when it came to their AWS and their cloud, and there was a lot of concern there. Point is that analysts are not the end-all, be-all. We have to watch trends and what's happening. Right now, the trend is in our face, right there, right in front of you at this moment. We see that yields are up, and yields are up for a lot of really important reasons. And at the same time, we have to question how high does that stay? Even though we see that there is an increase in rates in the UK, Eurozone is saying no, but maybe. And China is adding stimulus, lowering their rates and their RRRs, triple R rates. So we have to look at what's happening with things like what are the rates going up for? Why is inflation spiking? Well, part of it's due to the oil and energy story. WTI oil was somewhere in the mode of 90, it was 92 today. Let's see if I have that on this page here. I don't have that here. Did I have it? Let's do this. See, yeah, USO another 1.78% up. So what we're finding right now is that there's a lot of problem where growth is being beaten by value, the banks, the energy shares. We see that gold is holding on very well, and actually the coins did very well overnight. And then we have earnings and pre-earnings and post-earnings and analyst expectations versus outlook. So right now, this is a market of stocks. That's the one thing I want you to understand. It's become a market of stocks. What the heck does he mean by that? What I mean by that is we think of a stock market. And we think about the S&P and the NASDAQ. We think about the small caps, large caps, and we think about all these different sectors. But I want you to start thinking of this right now as a market of stocks. And it's important to understand that when you think about where we are, that there are winners and losers. So we can have a Facebook getting hurt by Apple and the way they change their privacy buy-ins, if you will. And on the other hand, we can have a Snap that essentially is kind of the same in terms of how they work on the iPhone and other privacy issues, but coming down substantially. And yes, Facebook was holding up pretty well and Snap was down a lot. But Snap posting their first profitable quarter ever. Green. And the stock is moving very nicely on that. All right, quickly, falling knives. I mean, somebody's going to get bloody in some of this, but I think there's some opportunity out there. Find those support levels. Go out to your weeklies. Find where the support levels are on daily, weekly. I don't want you to go monthly yet. Let's just do daily, weekly. See if there's something there. Economics, U.S. economy is okay, in good shape, actually. Some moderation in some areas. Eurozone inflation clearly heating up. Employment reports we talked about. Next week is CPI, important. Wholesale inventories are coming up. University of Michigan as well, and we'll talk about all this. I mentioned, and I'll put this in the chat right now, 4-hour free trading course right here coming up. Just send us an email to support@triggercharts.com, and we'll get that hooked up for you. Let's see what's going on here. You see this little reversal on the 30-minute. We're here at 19.14, reversing down. Probably what's helping out some of the futures numbers right now, and also Bitcoin. I mentioned Snap before, up 44%, not reflected in these charts right now, but Snap right now trading at 35 and change, which 35, how much is it? What is it trading at? 35.35, right here. That doesn't look very impressive, does it? But what do you got there? Let's hone in. What if you've been paying attention to anything I've been talking about? What do we have over the 34 level? What do we have here? We have a blank area. Snap, good opportunity to get back to 40. In my opinion, on a daily chart, we've seen this rolling down. We hit a point yesterday that was an oversold level, and you can see this on the aileron by the X there, and oftentimes you start seeing clusters of those. Those are areas that like, maybe I should think about getting involved. Well, this thing just kept on coming down and down and down. I mean, just delirious. It looks like it was going to zero, right? So Snap started basing out right here at about 28. Fell because of the Facebook report yesterday, and now trading 35.46. Very nice. All right, what else do we got here? Let's go to the top. Facebook down another 2% today at 232. Let's kind of zoom out. You know what I want to do? I want to go a longer time frame here just to see what's going on. This is just ugly by ugly standards. Interesting, we did stop on what I would call a soft support point. And I got 169 drawn in here. I think that's pretty interesting. Where would I find support? Well, if I was to draw things, I would say, well, somewhere around here looked like pretty good support. That's about the 250. I'm going to make this a little bit thicker here. Let's make this red so we can see it really. Let's go bright red. Weight, we're going to go thicker. And our labels, we're going to make big so us old people can see it. There we go. 260 right there. Double click your line. You can do all sorts of things to it. So when you draw your line, you're kind of moving it around. Where else was it? There was some support right there, 238 and change. Where are we now? 232. So let's kind of go out. This is weekly. We're really searching here. We're really searching. I got to tell you, this 212 line. So I'm going to move this up and show you what I mean by that. See the multitude of areas here. That looks stronger overall, 212. When I wait for 212, there's definitely some 210, 211, right about in this range. That would be a problem. We got another 10% down, 12% down on Facebook. If we were to get there, that would be pretty interesting, taking us back to 2020 levels, taking us back to where we were pretty much not at the lows of the pandemic, but wow, pretty fascinating. This is another stock that has been just getting obliterated. Let's go back to our daily. Again, all the charts that you can look at, every pattern that we talk about can be looked at on any time frame. I do daily just to kind of keep consistency. And for those of you that are more of investors or swing traders, a lot of times daily is what you want to look at. This came down to support here, double support, I would say. And you can kind of look right here in this range right here, about 93, 94. Yesterday was down to 92 and change, up about 9.4% after it beat. This stock is very interesting, back in that whole metaverse equation. We'll see what happens. It was as high as 105 last night on the pre-markets. Just again, another very simple pattern that you see here, a head and shoulders, which is unmistakable, right? Head and shoulders, unmistakable, and then a drop back down to the lows that we saw in the past. Viacom, CBS, trying to get some legs here, been getting just beaten up. The Paramount Plus deal. If you're watching 1883, I love 1883 up until the latest episodes. Become a real snoozer. Don't think I'm going to really be watching that. Google had some nice numbers, getting hit yesterday by the fact that, well, even though we're hitting close to an all-time high, numbers were really good. We got hit by what's going on with Facebook, and that was yesterday's situation here, but really showing some great strength. Twitter up today again. Twitter just with the thought, I think, of snapping. Oh, it's not that bad. Overdone. I mean, look at this number, 70 down to 34, 50% decline. Now, many of you say, well, that's because it was overdone to the upside. Let's just draw some kind of a simple, very, very simple, from here, this April, this range here. Even a trend line here. Well, yeah, we should maybe be over here at 65. Now, I don't know where the trend line comes here. If we could maybe look for a weekly and look at, this can be hard pressed to do here. But let's just pretend we can do this. Let's look at a trend line, very simple, here, something like that. In that trend line, that looks like an interesting trend line, maybe under normal conditions without, all this going on and this and this and this and this. This is weekly. So it's very difficult right now to really judge a lot of this gappiness. Look at all these gappiness, gap up, the gap down. This is back in Q4, this February of 2021, where everything went haywire, came back down, and then right here was where the death knell, where everything was just blown out across the board. Snap, again, I mentioned this, up very nicely. This is daily on Snap. You see this long term. Big gap down last time after there was a big concern. Right now trading, I'll put a permanent line because we'll come back. I'll even put a box here. That's what we'll do. Draw a box in this range right here. I think there's some interest right there that you could really do some work with. DWAC, they've been playing with this, going up and down, up and down, up and down. Can't seem to get over. This is what, daily? Yeah, daily. This is good. Watch over 87. You start getting about that. I know this sounds a little nuts, and what this is SPAC, and this actually has been working pretty well. This is the Trump SPAC. Look at the futures move. Let's go back here for a second. Bond's not moving too much. Coming in a little bit, 1892. You got this big rip. Look at that. Look at that big rip into the open here. I think there's going to be some volatility today, I'll tell you that much. But I would venture to say that with the earnings that we got, hopefully people could see through. I think you get some decent things happening there. PayPal, disaster. 300 down to 124 just from here. If we go back even further, we're talking about a high of, what, 315? Just miserable. Amazon came out with good numbers. Big move here. What are they trading at? 3108. So 31. That's where they're trading right now. That's right to the top. There's some real room for this to move. 3150. I would say, I think there's a lot of room for this to move, but next real test is going to be right about the 3200 level, possibly. SI, this is Silvergate Capital. If you want to have something that looks probably very similar to everything else, you know, I call this is like a ghost, right? Do you see it? See the eyes? See this ghost? Do you see the ghost? This kind of, that's his hair. This is some kind of character. We're seeing that on a lot of charts, I will tell you right now. And that same weird move like this, the big FU that's in there, a lot of charts. Big FU on charts. Look at that. See it? That is leading to this downside action. We've seen aileron in terrible shape here. Starting to see a little bit of a move against the grain right now, up a little bit. This is a play on Bitcoin. It's an alt play on Bitcoin. They do most of the trading and lending for coin. So if you want a bank that is engrossed and embroiled in coin as a proxy, kind of interesting. Oh, this is just what's with the natural gas? I mean, have you ever in your life? That's nuts, right? What do we got here, Lex? Okay, somebody's asking me about Palantir. Yeah, that's pretty ugly. Everybody was all agush about, is it Palantir? No, that's not right. PLTR, enter. There we go. Yeah, this really just horrible. It's getting towards IPO levels. 933, $10, where it opened up. I would call it 10. Closed at what, 12 and change? Really, where's it at? 1245. Palantir was the mother of all wonderful things. This is a different chart than we've seen from the other ones. This chart right here, if you look at it, it's really not gone anywhere forever. And then finally, with the tech sell-off came in. So it held up very nicely after this looks like valuation point here. I would think that maybe a chance back to 18 is possible. We'll have to get up past 14 first, up to 16. But right about here, it looks like that's about where it's going until something really unbelievable happens. Somebody asked, are you only on TradeStation? Right now at the moment, please consider the old customers too. Oh, listen, if you're a customer and you haven't gotten the 4-hour training course, send us a note. Send us a note. Send us a note. Where am I going here? Somebody, oh. I saw OW. It's OVV. Yeah, I think this is in the commodity space. I'm not, what is it? Oventive? I don't know what this is actually. What does this stock do? Let's look. Let's look what this stock does unless somebody wants to tell me. Let's see. OV stock, what do they do? I don't know. Looks pretty good though. They are formerly they're in Kana. Yeah, hydrocarbon exploration and production. They're an oil company, or I should say in the energy. Thank you, energy business. Yeah, as in the old Encana, right? So yeah, I don't think there's any mystery why this is doing well. Hello, energy has been doing unbelievably well. XLE up again, trying to short this a few times against the grain, thinking that maybe we can get a kind of a move down to about 64 from where it was. But every time I start moving into it, I'm like, you know what? Let's just cut the loss right now at zero gain. kind of moves back down to the line, thinking it may go, but holding. Look at that beautiful support right there on energy. No question, this is a nice uptrend. Everything looks great here. Listen, we're going to cut it right now. We're going to leave. We're going to come back again next Friday. Have a great trading day. Do your thing. Make some money. Let's go get them today. Thanks for joining me.